Welcome to the Deep Dive. Ever wondered how a farm actually shows up on a company's balance sheet?
It's a great question.
Today we're tackling IAS 41. That's the international accounting standard specifically for agriculture.
That's right.
Our goal really is to unpack how companies account for, everything from livestock to harvests. We're using the official standard as our guide, trying to make sense of the financial side of farming without getting lost in too much jargon.
Exactly. It's where biology meets finance, essentially. IAS 41 lays down the rules for these, unique biological assets and the agricultural produce they yield.
Okay, let's get into that. What exactly are we talking about? It's not the buildings or machinery, is it?
No, not directly. IAS 41 zooms in on biological assets, so living animals and plants. But there's an important carve-out now for bearer plants.
Bearer plants. Okay, there's the jargon. Can you break that down?
Yeah, sure. Think of something like a grapevine or maybe an apple tree. It produces fruit year after year, right?
Right.
And you don't usually sell the vine itself as produce. So the vine or tree, the bearer plant, is actually handled under IAS 16 now. That's the standard for property, plant, and equipment.
Ah, okay. Like it's a long-term asset, a producing machine.
Precisely. That change came in back in 2014. Yeah. But, and this is key, IAS 41 still applies to what grows on those bearer plants.
So the grapes on the vine, the apples from the tree.
Exactly. Or milk from a dairy cow. The machine is IAS 16, but its output, the produce, falls under IAS 41 at the point of harvest.
Got it. So the tree's the factory, the apples are the inventory. That helps. And the standard mentions things like sheep being the biological asset and wool the produce.
Yes, or timber plantations are the asset and the felled trees are the produce. It's that moment of separation of harvest that's the critical point.
Okay, so definitions seem pretty important here. What's agricultural activity?
It's basically managing that biological transformation, the growth, production, etc., and the harvest, all with the aim of selling the produce or converting it.
And biological asset is just the living thing, plant or animal.
Yep. Agricultural produce is what you harvest from it.
Right.
Biological transformation covers all the natural processes: growing, aging, producing offspring, making milk or wool.
The whole life cycle.
Pretty much.
Yeah.
And harvest is specifically the detachment of that produce, or sometimes the end of the asset's life, like felling a tree for timber.
Okay, clear enough. So how do these get onto the books? When does a company recognize, say, a field of wheat or a herd of cows?
Recognition happens when three things are true. The company controls the asset because of something that happened in the past.
Like buying them or breeding them.
Right. Second, it's probable they'll get future economic benefits from it. Sell the milk, the wool, the crops. And third, its fair value or cost can be measured reliably.
And how are they measured? Is it just what they cost?
Generally, no. For biological assets, the rule is measure them initially and then keep measuring them at fair value, less cost to sell.
Fair value, less cost to sell. So market price minus selling expenses.
Essentially, yes. What you could get for it in the market right now, after deducting the costs of actually making that sale. There is an exception, though. If only on initial recognition you genuinely can't measure fair value reliably, then you use cost less any accumulated depreciation and impairment. But you have to switch to fair value as soon as you can measure it reliably.
Fair value for living things sounds potentially tricky, a bit subjective.
It certainly can be. Valuations might differ. But agricultural produce the harvested stuff like apples or wool that's always measured at fair value, less costs to sell at the point of harvest.
Always.
Always at harvest. And that value becomes its initial cost if it then gets treated as inventory under IAS 2.
Okay. So sometimes costs might look like fair value.
Well, yes. Maybe for very young assets where not much biological change has happened yet, or if the impact of that transformation on the price isn't significant. But the principle is fair value.
And what if the fair value changes? Market prices for cattle go up, for instance.
Good question. Any gains or losses from those changes in fair value, less cost to sell for biological assets. They go straight into profit or loss for that period.
So it directly hits the bottom line.
Yes. And same for the gain or loss you calculate when you first recognize agricultural produce at fair value at harvest. That also goes into profit or loss.
Interesting. So farm performance can be quite closely tied to market price swings reported period by period?
It can, yes.
What about government grants? You mentioned them earlier.
Right. If you get a grant related to a biological asset that's measured at fair value and it's unconditional, no strings attached, You recognize it in profit or loss when it becomes receivable.
And if there are conditions?
Then you only recognize the income when those conditions are actually met. If the grant relates to an asset measured at cost under that rare exception we talked about, then you follow the rules in IAS 20, the general standard for government grants.
Got it. Okay, last piece then, disclosure. What do companies need to tell investors about all this?
Transparency is key. They have to disclose the total gain or loss that arose during the period on both biological assets and agricultural produce.
Makes sense.
They also need to describe their groups of biological assets. It's encouraged to split them between consumable ones like livestock raised for meat and bearer ones like fruit trees, and also between mature and immature assets.
Okay, so investors get a better picture of the operations.
Exactly. Plus non-financial details like quantities, number of animals, hectares of crops, and crucially, a reconciliation showing how the carrying amount, the book value of biological assets, changed from the start to the end of the year.
Showing additions, sales, fair value changes.
All of that.
Yeah.
And they're encouraged, though not required, to separate out how much of the fair value change was due to physical changes like growth versus just market price movements.
That would be useful.
It definitely adds more insight. And of course, if they're using that cost model exception, there are specific extra disclosures needed for that situation.
So wrapping up, IAS 41 really provides a specific lens for agriculture, focusing on, well, the unique living nature of these assets and how they change.
Absolutely. It acknowledges that biological transformation itself creates value.
It leaves you thinking, though, doesn't it? With bearer plants now under IAS 16 and this focus on fair value, how does that shift how people might invest in farming businesses?
That's a great point. And what are the practical challenges really in getting a reliable fair value for, say, a complex forest ecosystem or a specialized herd? Something definitely worth mulling over.
Thanks for diving deep with Deepcast AI today. If you enjoyed this, give us a like and definitely subscribe and ring that notification bell so you're first in line for our next exploration.